Good morning, Paul Georgie from Allendale. It's November 3rd, 2010. The dollar is leading the direction of commodities here again this morning. However, currently the dollar is steady, so expect the grain markets to open steady to slightly higher, in line with what they were over night session. Corn traded 2 to 3 higher, beans 2 to 4 higher, wheat 2 to 4 higher. Expect some kind of trade along those lines. The fundamental news is pretty much non-eventful, I guess you might say. The Republicans took over the House, didn't quite make the Senate, kind of in line with what trade and prognosticators thought was going to happen. So not a big excitement there. Now we've got the big news of the day is going to be the Fed, end of the Fed meetings when they share their thoughts here at 1:15 this afternoon. So the direction of the dollar still having a huge impact on commodity prices here in the U.S. Other things that are going on in the grain markets, the Dalian exchange in China, corn prices were lower over there, or actually were higher there because of the late harvest that China is seeing. They had a colder, wetter spring, caused a delay, not like in the U.S. where we're all done, wrapped up already for harvest. They still have got some harvest to go. There's still a demand in local areas for corn and pushing prices higher there. However, on the other hand, soybeans in China were lower because of improving weather conditions in South America. Bean supplies should be greater, and we're seeing some pressure in the world markets because of good growing conditions and positive planting conditions in Brazil and Argentina. We only had 54 deliveries in soybeans this morning, not a large amount there, so that the delivery process is winding down. Some news out of Russia on planting progress. About 14.6 million hectares have been planted to winter crops compared to about 17.5 million last year. So they are seeing some reduction in winter crop plantings because of the dry conditions they see over there. Some of the major influences today might come from the technical side. We've got chart support at around 571 in the December contract of corn, and then again at 560. Soybeans have got support at the 1225 area, and then much better support around the 1211 area in the January beans. And the wheat market's basically in a trading range from 725 on the upside to 660 area, 665 area on the lower end of that range in the December wheat. In the livestock trade, cash cattle traded yesterday in Kansas again at 97.5 to 98. Still holding out in Texas. Not many cattle traded there, so we're seeing a weaker cash market. That's down anywhere from $2 to $2.50 from last week, and cutout values holding steady yesterday. Choice was up just 8 cents. Select was down 4 cents. We believe that the trend in beef is probably going to work lower here over the next couple weeks as supplies are plentiful, and we've got to clean up some of the inventory that the processors are holding right now. Chart support on the December cattle, this 97.97 area, $98 is key support. If we close below that, we could easily move that market down to the 96.5 area before we find some more support. In the hogs, a little bit better news. We had a second day of higher cutout values, 90 cents higher. However, cash hogs are weak. Packers are making some money here, and they are willing to put a big Saturday slaughter together. We're hearing right now estimates of 190 to 200,000 head for Saturday. We are seeing a bit of improvement in sow prices. It's steady to a little higher there. However, market hogs are still coming in at much heavier weights than they should be than compared to a year ago, and that is keeping a lid on this meat that we need to clean up. We need to get it cleaned up so we can see prices go higher. So we've got some volatility here. We're tightening up these ranges that we're in. Grain markets, of course, will be focused on next Tuesday's USDA supply-demand report, where we get an estimate on yield. That is the focus there. And then the other focus today, which is going to have an impact on all commodities, is the quantitative easing. So stay tuned to Allendale's research. We'll kind of keep you informed of things that are going on. And if you got any questions, give us a call, 800-262-7538. We wish you a very successful trading day, and we'll talk to you tomorrow morning.